Hi everyone. Hi Rani.
Hi, Mani. Good morning.
How are you?
Yeah, I'm good.
Hi Purni. Let me make you co-host Rani. So you'll be able to share screen. First couple of minutes I'll take time to introduce you to the audience. Okay. And then after that you can take over. You'll be able to share your screen, right? Or do you want me to?
Yeah, I can go ahead and share, Mani.
No.
Yeah. If I have any challenge, maybe I'll let you.
Sure. So in the first few minutes when I introduce, I'll share my screen and introduce you, and
Sure,
then you can share your screen.
sure, sure. Thank you.
We'll give few minutes for people to join. All right, I think we can get started. Good morning, everyone. Sorry for not being able to open my video, having some bandwidth issues Saturday morning. Okay. Welcome to another exciting edition of BA Unplugged, where we are about to get introduced into the basics of anti-money laundering, combating the financing of terrorism, and know your customers. First off, a big shout out to each and every one of you for choosing to spend your Saturday morning here with us. And now to introduce our guest speaker for today's session, Ms. Rani Bhaskaran. She has a stellar 18 years track record as a lead business architect in the banking sector. She is a true master when it comes to navigating the intricate webs of banking products, regulations, and everything in between. From wealth management to corporate banking, she has seen it all. Now, before we get started, just some ground rules. Let's give Ms. Rani our undivided attention for the next 40 minutes and ensure we make it a more engaging session. And in case if you have questions, do not hold back. You can drop your queries in the Q&A section available in the Zoom, and we'll take them up towards the end of the session. Okay. All right. Without wasting any time, let's give a warm virtual welcome to Ms. Rani. Take it away, Rani. Thank you.
Sure. Thank you, Mani. I'll get started with sharing my screen. Just give me a minute. Okay.
Yes, it's visible.
Thank you, Mani. All right. So when we talk about AML, CFT, KYC, right? It's crucial to understand why we have all these concepts and how is it going to impact us in real-time scenario. So this is the main question which brought me interest or passion into this area. So with that note, I would want to, give a quick intro about my knowledge or working experience or hands-on on these topics. So I have an implementation knowledge on AML KYC in Pega application. Plus, I also have hands-on experience in dealing with regulations, as Mani explained. So these questions, right? Why AML? How is it going to impact in every walks of the industry that we have? Really made me to probe more, and that's where I am. So what we're going to see today is, right, the key contents of AML KYC. Now, when we talk about AML KYC, I'm sure everybody would have done their KYC in different aspects, right? In the banking sector, or KYC for your Aadhaar, or elsewhere as well. But just to understand what kind of audience we have, can somebody give a small input on what do you think about AML KYC, and so that it will be helpful for me to understand how much we are aware and how much we want to get started. So any additional information to the existing knowledge will be helpful, right? So for that perspective, can anybody volunteer to go ahead and give me a detail about what would be KYC and what would be AML KYC?
Yeah. KYC AML all comprises of onboarding custom or the onboarding process. Okay, for example, uh, before becoming a customer, the KYC process happens in the financial institution, banking or anywhere, non-banking places as well. So check for the background and various other details on the genuine way of the customer onboarding process. And AML is basically after the customer getting into the live transactions, they will incorporate a retail or to a segment of the financial segment. It is the act of tracking about the transaction on the anti-money laundering perspective, and it goes into various other detailed aspects of how to handle the AML process and what are all the guidelines governing through the local compliance, regional compliance, and global compliance. This is a brief about.
Absolutely. Thank you so much, Ramanathan. So,
Yeah.
as he rightly said, right, KYC is something to know whom we are dealing with and, what kind of information the customer is. So, when we say anti-money laundering, it is about, money laundering checks, which is into place when we talk about KYC. Now, I'll also give you some importance about why AML logics needs to be carried out in KYC as well as we go on in this session. So, my understanding that we have people who are aware about this concept. So, I'll delve into a couple of deeper concepts as well. Please go ahead and asking questions, or we can also park it for the end as well. I'm just taking it light in a very slow pace, but if you want me to deep dive into any particular topic, please let me know. Thank you. So these are the concepts that we're going to look at today. So further going into the details, right? So what is money laundering? First place, we talk about AML, KYC, and we say AML. What is money laundering? First place, the illegal process of making large amounts of money generated by criminal activities such as drug trafficking or terrorist funding appear to have come from a legitimate source. So this is the ideal definition. So basically, right, there are legal jobs that we can do in any country and illegal jobs that we can do in any country. This depends on the rules and regulations laid by the country, not the value and virtues that we have been cultured in, right? Uh, of course, the rules or regulations are derived, but there will be small variations in different countries. As in, there is a seaweed which cannot be transported from India to foreign countries, wherein in the US or in the Singapore, right? Yes, they can be exported and they can be imported as well. So there are a few nuances that we need to understand from perspective of how an income is generated for a given country. So that will determine whether a particular case is laundering or not. So this is very crucial. Though we on an overview understand what KYC and what AML, we need to also go with the rules adhered by the country, which is laid out by the respective regulatory bodies. We will talk about more about regulatory bodies and rules and regulations, but just I'm giving an overview here. So when we understand money laundering, we need to be very clear about what are the legitimate ways of generating income and what are the non-legitimate ways of generating money. So basically, cleaning the black money and making it white is the typical understanding of money laundering. Making the dirty money clean. As in, I would be a person who is actually doing some financial crime, or I can also be a person who is illegally sourcing money through gaming, or say for example human trafficking, or drugs, sending and selling drugs, or it could be some any small part of terrorist activity, as in buying some food for a person who is responsible in creating a big disaster in terms of terrorist financing. Even that would come under consideration. So any money sourced through these aspects or events, right, when it is passed on to a bank to make it clean, is money laundering. So how these money are brought into and how it is cleaned practically, is that right? Say I would have been sourced my income through all these illegal activities, and I have the complete cash in my hand. Now what happens is that, right, I go to a bank, I open an account, and I deposit these money. Now this becomes a legitimate money. The bank is authorizing a person to have the services of savings or current account using the money the person is actually bringing in. So now this becomes a legitimate money. The money becomes clean. It could also be a transfer from elsewhere to this particular account as an initial deposit amount. Still, it becomes clean. So we need to be very careful about who and what kind of profile that we are bringing to the customer, to the bank. So this is another typical example of, how the dirty money is being collected. So, the collection of dirty money for any illegal activity, as you see in the left corner. And then we have this money being deposited in the bank, which becomes a part of the financial system and it becomes clean. And this money is being, distributed to different part of the world, to different activities. And then once it is transferred, it has been used for still yet another purpose. Now, this is one way of looking at it. Now, second aspect is that, it could be a clean money. Here, the collection of dirty money could have been a clean money as well. Now, all these money would be placed into the bank, and say, I'm a big shot, I'm paying my employees, say, for example, from different departments in my software company. But then, how are they using the money? In terms of salary or in terms of money for buying any luxury, those money will be used. Now, this person whom I'm paying could be, say, a junior person. But if I'm going to transfer 1 crore, saying that I'm giving a gift to the person because of his or her performance, that is not kind of legal, right? That doesn't happen every day. It's not authentic. Why an owner should give so much of money to a junior person who's actually working on? Now, that's a question. So the flow would go either ways. Now, how are the cases pooling in dirty money and making it clean, or bringing in clean money and then through the bank being sending across to dirty activities or luxury activities, or unethical ways? All these happens in 3 stages, and these stages are discovered and identified as placement, layering, and integration. So placing the collection of the money first into the bank, and then layering them, segregating them, and dividing them in parts, and then sending across to different people. And now integrating them together. Say, for example, I have 10,000 rupees and I share 1,000 rupees to different people. And similar to me, some other person would also have transferred 1,000 rupees to the same 10 different people. And first person will get 1,000 rupees from me, and another 1,000 rupees from another person, and 1,000 plus 1,000, 2,000 would be utilized to buy some gold or some expensive item, though that person is not actually, uh, uh, earning that money. So this is how it goes. So this is the basics and crux of understanding money laundering, because in KYC world or in transaction monitoring world, we need to understand how the money got moved and how we can identify if it is a legitimate movement or an illegitimate movement. So this is the whole idea. This bigger picture will definitely help us in further drilling down on what was activity and how it is being done, structured, how is it being structured, and it was being how the bank was used to perform these activities. So, right, let's talk about AML, CFT, KYC. AML is anti-money laundering. CFT is counter-finance terrorism, and KYC is know your customer. So we have the difference between anti-money laundering and KYC here, as rightly said by Ramanathan. So I'm not further going into this topic, but then in terms of the whole process of understanding this AML world, there are different departments that are involved. The first and foremost is KYC, and the second would be transaction monitoring, and the third would be SAR. Now, I'll tell you why these are in a sequence and how it is being flown across. So, when I am talking about KYC, right, that is the first entry point for a customer to make the dirty money clean. Other than depositing or opening an account, there is no other way a person can clean the money. So KYC becomes very crucial in terms of AML. In the past, right, for the past 10 to 15 years, KYC was just KYC, if you remember. When the KYC concept when first came in, right, it would be a one-pager, a physical document, or a simple questionnaire that we need to answer. But today, if you go and open an account in SBI or Canada Bank or HDFC or ICICI, you can see that the questions are varying. There are added elements or aspects of anti-money laundering as well. Of course, the information is not going to be conceived exactly how you see in the onboarding document. There will be certain understanding which the analyst in the bank would be keying in their internal system. But the whole crux is that, right, the aspects of AML, the checklist that is being validated or created for KYC has AML aspects as well. This is the whole crux of understanding AML KYC. AML in KYC world. Now, AML in transaction monitoring world, right? So, for people who are not aware about what transaction monitoring is, as in when we do some transaction, whether it is financial transaction or financial transaction, as in transferring money or trying to change the password or trying to update the address through online or in the ATM or in the branch banking directly for any kind of LOBs. Now, what happens is that, right, these are non-functional or financial transactions. Now, all these things will also be monitored. How often these information are changed? How drastically these information is changed? Say I'm sitting in India and if I'm going to change the address to US, that wouldn't be a legitimate movement, right? We need to declare it first. Rather than just updating the address, we need to first declare that I want to move my account or
रीजन
product
बता क्या
service.
करना है, मैं भी चलता हूँ, रीजन बता, मैं लेके चलता हूँ, अपनी अलग से गाड़ी लेके चलता हूँ, देखता हूँ क्या कर रही है और वहां जाके हड़का दूंगा अगर वो रीजन.
Sorry about that, guys. Please go on mute in case when you're not speaking. Please. Thank you.
Yeah, no problem. Thank you. So we need to legitimately first declare and then make the movement. If that is not done, or if the address is changed multiple times, if the password is changed for no reason for every week or every day, these are alerts that we need to look at, right? So that would be taken care in terms of transaction. And if there's any reported unusual activity on the whole process of KYC or transaction alerts, any given bank or financial institution is liable to have this reported to SAR. So what happens is that they have a regular feed that goes to the regulatory body of that particular corresponding country to indicate or expose or submit the suspicious activity that the bank has identified. Now, further, right, the regulatory body would go ahead and do some analysis from their end, and they'll raise a flag if there is any serious issue pertaining to this particular event. Now, when we say regulatory body, for example, in India, it would be RBI. And also, we have regulatory bodies for different products and services a bank or financial institution is going to offer. So for consumer savings, it's going to be different. For business, it's going to be different. For wealth management, it's going to be different. For securities and trading, that's going to be different. So this is the gist of why and how AML is impacting in different areas. But our focus today would be predominantly on KYC. I just gave an overview so you understand how the flow starts and where are the information getting transmitted and how we need to look at it from a business analysis perspective. Now, importance of AML KYC in preventing financial crimes. Now, any anti-money laundering activity, right, starts from a financial crime. It goes to laundering and then it becomes a serious suspicious activity. Now, this is the flow. Not all financial crimes will fall under anti-money laundering activity, but every other anti-money laundering activity starts with financial crime. So this is the reason why we need to be very careful about being suspicious on any suspicious activity. This is the reason why we report any given suspicious activity to the regulatory bodies. So now, as you see here, the importance of AML is that, right, preventing financial crime. So if we have the corresponding checks being, incorporated in the strategy or the workflow or the process by itself by the financial crimes team, who would be directing the KYC process in every company, that would be really helpful in preventing the financial analysis. And this also helps to safeguard the financial institution, and compliance with regulatory standards would be adhered. And when we have an adherence by the regulatory body, we are being considered as, authorized people by other banks and financial institutions across the globe. So to do business among the banks is going to be very easy, and it's going to be revenue generating for the banks as well. So that's how, the Vostro and Nostro accounts are being created based on the regulations that given banking or financial institutions following. And then enhancing the international security by following these rules and regulations. So if US want to do a business with Indian banks and financial institutions, we need to follow FATCA and FinCEN and other required regulatory rules and regulations in such a way that US is comfortable enough in allowing any banking transaction that happens within the US. So it's kind of a mandatory thing that you want to do a business around. So anti-money laundering policies and procedures exist to help financial institutions combat money laundering by stopping criminals from engaging into transactions to disguise the origins of funds connected to illegal activity. These are kind of checks that we are trying to actually place in our system. But still, even though placing all this, with the amount of activity that happens in any given country, the country will be rated on how event prone in terms of money laundering will always be that. If you see, right, for US, when they are doing banking within them, they are very low risk customers within the US because they have rules and regulation and process within US to provide any product or services to them. But then if you talk about a savings account or a consumer account or a wealth management account in India, US banks will not consider them as low risk. In fact, India is a high risk country with respect to US. But that is not the same for, say, UK or Germany. They have a different way of looking at things. So India will look at US in a different perspective. India will look at China in a different perspective, and the US would look at India's different perspective. So how these perspective policies and procedures are formed depends on how a country is looking at the other country and what are the rules and regulations that they've adhered to. So these are very crucial to understand, to lay the rules, follow the rules, and have the rules implemented in our process. So in addition to helping financial institutions comply with anti-money laundering and counter-terrorism financing laws and regulations, right? Anti-money laundering policies and procedures will help set the tone for the organizations. This is what we are, and this is how we do business, and this is how we treat people's money. It's the brand that they're trying to build, and which is important as well. If there are, too many incidents in security not being taken care by a bank, obviously people are not going to go and deposit their money. and they're not going to get loans, or they're not going to do some trading on them, etc. So given the volume of transactions processed by banks to put their AML policies into action, financial institutions rely on technology to prevent, detect, investigate, and report suspicious transactions. So these are the areas where, AML checks are laid out on a higher note. So now let's go and deep dive into what AML KYC is looking at from banking and financial institution. Now, when we talk about the importance of AML KYC, right, it's not just for banking. AML KYC is also being incorporated and leveraged in other industries as in insurance, manufacturing, health, and any other industry. But the level of scrutiny will not be as much as we have in banking. But definitely anti-money laundering is getting leveraged in other areas, given the risk that we have in today's world with AI, with cloud computing, and cryptocurrency, etc. So we need to be very careful, and every other industry is kind of trying to leverage them. So let's go into banking. So when we look at banking, right, overview of any AML KYC regulation would go this way, as in, first know your customer checks are happening, and then the AML concepts are being integrated in transaction monitoring, and again, the regulatory rules and, the anti-money laundering concepts are laid out on the PEPs, because politically exposed person have their work culture in certain fashion in any country, that they would be exposed to more of money, and then even the money laundering activities. We are not here to judge anybody, but then we need to be very careful about with whom we are doing and what kind of business or what kind of profession they are into, right? So we need to be very careful in laying the rules for them. And for those who are new, right, there is a say that once a PEP, always a PEP. But there are few countries who don't go by them, but they do have some cooling period until when they consider a PEP as a PEP, no matter what. And post that, they give a little bit of a leverage. And then sanctions. Sanctions is something very important, because a customer or a client, being it an individual or an entity, right, they might not be exposing their own statuses in terms of defaulting a business or defaulting entity or individual, but then it is the banks and the financial institutions job or responsibility to further check for the screenings, and then we need to have the screening results being integrated with the flow. Now, why do we have all these things is that these are very quite easy to have it technically incorporated, but as business analysts, right, we need to really think through from holistic perspective on all these topics in different stages, and we should foresee that how a certain information being collected or how a checklist being laid out being used in other areas through the downstreams or upstreams. So that is kind of crucial. That's the whole idea behind why we are talking about all these concepts on an overview. And then we did speak about continuously about regulations, right? So we will also see what it is when we talk about regulations. So as you see here, these are few prominent or key regulatory bodies in different countries. So in Canada, it is FinTrack. In US, it's OCC, currency related, regulations. And FATF is something global, and we have FCA, we have AMF, predominant for France, and these are quite prominent regulatory bodies who are prevailing across the country. We have, as I mentioned, right, it's not just for controlling money. For securities, we have a separate regulatory body as an SEZ, and for consumer space, we have different regulations, and home loans and different types of loans have different regulations. And once once a banking or financial institution has signed up to adhere to the rules and regulations of the regulators, we need to have them incorporated in whole of the system. And there would be a regular audit being done. And part of this audit, right, when something is popping up, that's when it would be validated, or the bank will be penalized for any miss from the banking or financial institution perspective. So for this reason, we need to ensure that the concepts or the understanding or the layouts and the rules and regulations with these regulatory bodies are all incorporated in the different aspects of the compliance process that any bank or financial institution has. So it's very, very crucial. So as business analyst, right, we need to be very proactive in understanding what are the new versions of the regulations that has been declared or announced by the regulatory body and how it is impacting the current business and etc. This is quite important for the business analysts to understand and then bring it to the technology team or the product owners or the business by itself. And we need to be upfront in understanding to have them incorporated. So what would happen if we don't do all these checks for AML in KYC? Why should we be following all these rules and regulations? Why should we be doing giving an effective anti-money laundering checks to KYC or any other aspect? So here you go. So these are different types of penalties that 2000 different banks and financial institution received from the RBI and other regulators in 2022-23. So these are few examples that you can quickly, we can run through. I don't want to go into detail, but then this is an excellent example that, on a regular basis, though having so much of scrutiny, we do have a lot of events that are happening. So as the check for regulation is happening, to break the checks is also, which is happening parallelly. So we need to be upfront or, latest in trying to understand how we can lay out a particular regulation and pick them in 360-degree to have them incorporated in different applications or the whole process that is being followed in a given banking and financial institution. See, HSBC has been there for a very long time, but still they have been penalized for specific instance of failure in connection with carrying out due diligence. This is something very, very important, right? Due diligence in KYC world, we will see the flow for those who are not really aware, but due diligence is something very important, and that to cross-border wire transfer reporting is the issue here. So as I mentioned, right, we need to follow the rules and regulations of the regulators such a way that is not impacting our business. When HSBC is having certain rating on the cross-border wire transfer reporting that was, penalized, then it would take a couple of years to have it mended and couple of audits to, come back to original shape. So that period of time, say 2 years or 3 years, is a big market risk. The reputation risk that the bank has got. Now, HSBC has a reputation risk from cross-border terrorism. So other banks, when they're trying to, send money through HSBC, they'll think twice, or they will have additional checks done, or they simply would cancel their Nostro accounts to do further transactions. So that's the threat that we have. Similarly, for Bank of India, which is very surprising, right? Failure to adhere to UCIC norms and complete the process within timelines. So this, even within, adhering to timelines is key. That's because it's crucial to catch hold of certain leakages in terms of events, right, within the timeline. So that is something which is important. If a report has to be sent manually, yes, we'll have to send the report manually. If it has to be sent by quarterly or biannually, it has to be followed. So that is very crucial. So these are few examples that you can look at. And then let's talk about how the AML KYC process happens in a banking world. So this is the overview. I'm really not going deeper into it, but then I'm going to touch upon the key aspects, which is really going to understand, by which you can understand the KYC process. Now, what do we know is, right? Say if I'm going to, if I want to open an account, I take all my ID proofs and address proofs. I go to the bank, I submit all of them. I fill the onboarding form, I sign it, and then they accept the documents. They do a preliminary check, of course, and then they accept the information that we have given, and they acknowledge it, and they send us back. And after 3 to 5 business days, depends the bank, we get the account. Now, within this period or post getting the customer ID for a particular account or the account number by itself, what happens is KYC process in the banking or financial sector. So basically performing customer identification process, though we got the information, say I'm giving my passport or Aadhaar card as my ID proof and address proof, the authenticity of the document will be validated by the analyst team. And that analysis will be approved by a couple of departments. And then finally, the case will be closed for onboarding. So, gathering and verifying customer information from documents such as passport, government issued ID proof, etc., would be validated. They won't consider directly the proofs. They will do their own documentation verification and they'll store the document. And we have a storage limit as well. And the expiry of the particular document would be entered. And re-KYC would be done post that particular, timeline. So now what happens is source of welcome analysis. I kind of go to the bank and I'm asking for an account. My source of income will be taken care. Why? This is a crucial part. Say I am a business analyst and I earn certain limit of amount. But if I'm a celebrity or if I'm going to be a politician, my cash inflow or deposit and credit inflow is going to be different. So we need to profile the customer. We need to profile the address, the income, the information that I'm sending, the photos, the authenticity of the photo with the ID proofs, everything would happen at the background. So basically, right, how we are capturing the information, how are we doing a profiling? We are not looking at the person for profiling, but why we say for certain activities the person should come to the bank, because we're trying to validate if he or she is the appropriate or authentic person. Plus the transactions and activities needs to be profiled to ensure that this person is doing a legitimate transaction. Anybody can walk in and kind of give the name and talk to the branch, but are they doing proper analysis? Say I have example, right? Say I have my parents who are 60 years or 70 years, and if I'm doing a transaction on their behalf, now I cannot sign their checks, right? If I want to sign their checks, basically, I need to give an authorization letter for which my parent and I have to go to the bank, give an authorization letter. We will have to, in phase we need to go do that authorization. Post which I can, do sign their checks, or I can send a check on behalf of them for a certain period. That would be 6 months or 1 year or 2 years. And I need to renew it as well. This happens in case of old age parents. So there are certain scrutiny for each and every activity. Similarly, everything has a timeline, everything has a validation. That is what we're looking at in terms of profiling a particular customer. So if I am signing the check for my parents for a couple of period, I will not be allowed post that. And if a new person is coming and saying, I am the second child, then the bank will not allow the second child to go ahead and do it. Bank will ask why the first child is not performing this activity and why the second child has to come and do this activity now when the renew process is happening. So there is a pattern in which the account has been dealt, right? That pattern needs to be profiled. And we need to think on those lines when you're capturing the information of a KYC as well. And perform sanction screening. Screening against sanctions list, right? Today, when I'm opening the account, I might not be a politician, but tomorrow or after 1 year or 1.5 years, I might become a politician. And I will not have a need to go and tell the bank that I'm a politician, because there wouldn't be a requirement as such if I want to join a political party. But then from the bank perspective, a screening has to be done every, regularly, to ensure that if a particular customer is being defaulted by the media or in any of the sanctions list, in terms of big shots for any entity or business related aspects, or individual in terms of any case where they have been penalized for certain activity, etc. And risk scoring. Now, risk scoring is something very, very important for the bank to understand where and how are we categorizing this particular customer with the products and services that we are providing. So, if I am example, if I'm a politician, I'm a high risk to do uneven limit of transactions. So I'm a high risk customer. If I'm coming from a jurisdiction specific, defaulted jurisdiction countries, as in Pakistan, Afghanistan, or Iran, Iraq, where the activities are prone to be terrorist or activity or war related scenario. Now my risk scoring becomes high. I mean, I would be a legitimate person, but the bank will tag me as high, and the bank should tag as high because of the environmental conditions and situations, there would be certain activity which will go adverse, and we need to be very mindful of what kind of transaction, what kind of people we are having as customers, right? So that's the whole idea. So for these high risk customers, we need to do enhanced due diligence, as in asking for additional documentation, doing additional checks, doing additional profiling, and getting approved on certain aspects additionally from the compliance team or any other specific regional compliance officer or product related compliance person is all required. And post all these things, we do the onboarding for that particular customer. We will not say no to any riskier customer, but then we are opting to consider the risk, do due diligence from our perspective, and then being laying out to provide the services and products. So that's how KYC happens in today's world. And we need to be very mindful about different cases. This is just an overview. So when we look at the flow diagram perspective, whether it is individual or when corporations or entity, right? We check whether they are PEP or not. If they are PEP, additional EDD is done. If they are not a PEP, and if they are a high profile customer, again EDD is done. And then and the CDD is done. C is customer due diligence, is ED is enhanced due diligence, and SDD is simple due diligence. For some cases, right, you don't need a due diligence as well. For example, for the US customers for an US bank, they would say the due diligence is not required because we know how the ID cards or validations are performed there. So there would be any due diligence. But in India, if I am still a low profile customer or low risk customer, my due diligence will happen because they want to double check on the documents that we are giving. So it depends on how a bank or financial institution would want to proceed. So that's how the onboarding is getting approved or rejected. So as I mentioned, right, simple due diligence, simplified due diligence, standard due diligence, and enhanced due diligence. And these are little factors on how they are varying. And the rules and regulations for these, right, will be same for any kind of KYC process. So to start with, right, there are different types of KYC process. One is onboarding, another is maintenance, another is refresh or, re-KYC or ongoing monitoring. Now, what is the difference is that, right, we don't do KYC just for the new customers. We also have to do for the existing customers, but on a regular, periodic basis. Say, for example, in India, we do KYC once in 2 months or 3 months based on the risk profile. In the US, say, for example, they'll have they'll do a re-KYC or a refresh process once in 3 years. But if I'm an Indian account holder or if I hold a foreign account, right, overseas account in India for banks in US, now they do within every 1 year. If an account is being registered or onboarded in China, a US company would do it for once in every 6 months. So the duration of the KYC process and the type of KYC will vary, but the thumb rule is that, right, for whom we need to do the simplified due diligence, of whom we need to do the standard due diligence, for whom we need to do EDD, that will remain the same across whether we're considering new customers or existing customers, or we're doing a re-KYC or a maintenance process. Now, for maintenance, right, it could be any number of reasons. A customer would want to change an address or add an additional product or service, or they would want to, resubmit an expired passport copy. All these will come under maintenance cases, but they are all crucial as well. Say, for example, there is a defaulting situation. There is a person has become a political figure now, and that's been in the business. And during the sanctions check, right, if they figure out that that particular aspect is coming up in the media, then there will be an automatic maintenance triggered, and we need to have the process completed. We need to redo all the documents, procure additional documents as a politician, the registration number of the political party, etc. So due diligence is a vast topic, and it is not critical, but it is really vast to understand on what are the elements and factors that needs to be thought through and kept in mind. So as you see here, right, there are different factors for risk also. We did saw that the risk could be low, medium, high. But one example I gave is jurisdiction. Another example is a PEP. But apart from that, there are product related risk, there are transaction related risk, and customers as well. What kind of customer am I? Am I an individual? Am I a private banker? Am I a wealth management person? Am I an investment banking person? Or do I do trading with my account, or do I do securities? I'm an agency. So am I an entity, and which business or what kind of business am I doing in terms of entity? Am I having a gambling account, or am I a trust or charity? And am I a big corporate company? Based on that, the risk will vary. And delivery channel, how are we delivering my application? Say UPI or WhatsApp has payment transactions as well, right? So my delivery is not just messaging channel. I also do some payment. I also am an intermediate for collecting the payment and sending across, right? So my delivery channel will come into picture. And then monitoring and reporting suspicious activity. We did talk about SAR, right? So how do we monitor, and what are the areas? So if you see, this is the flow. So we do the enhanced monitoring on the customer, product, and the process. And then transaction monitoring will come into place. The procedures for KYC will be set. And then if there's any issue, then the topic for suspicious activity goes on. And then the collaboration and information sharing between upstream and downstream, and then to the regulatory bodies will happen, and the continuous training and education for any um, team or technology team, or the actual business product owners, or the business analysts. Everybody would be given training on a regular basis on all these concepts, so that they are up to date on the market changes, and then that would be incorporated in the team. So now benefits. Now we did see about all of it. Now let's talk about benefits that we have. So as I mentioned, right, the market risk, the credibility of the company, all these things will come into picture. Cost effectiveness. If we have penalized or fined, it's huge money which is involved because of the mistake that happened, right? So that can be avoided, and improved customer experience. So we can say that there was no sanctions laid out on a particular bank or financial institution for so much of period. So that becomes, better customer experience. Now, we wouldn't simply go to any bank and open an account. We will do our own due diligence. So how the branding is affecting when a case is happening, right? I'm very sure when the scandal happened in Punjab National Bank, we didn't want to go and put our money there, right? We want to, there were so many subscribers who closed their accounts and they went in for other banks. So those are credibility a banking institution has has, right? So that it is impacting the customer experience, lowering processing time. If you have effective things on place, you don't want really to do enhanced job, right? So that's one thing. Increase success rate. So your market value, your NSE or other values goes up, and your value is more. So people will start investing in terms of mutual funds, or other aspects, trading and etc. So enhanced reputation and trust will be built on the banking or financial institution, and reduced financial risk will be there, and compliance to regulatory requirements will enhance the international business. So these are a few of the aspects. So these are the topics that I wanted to discuss today. So I'll open for questions. Please go ahead with any questions or any clarifications.
Uh, I have a question here. Is that as a business analyst, for someone who is working in financial institution, right? So, and let's say if I have not worked on this particular money laundering or this all these topics of
Okay.
lately. So when I try to transition myself, how do I position myself? Or what are the first things that I look into whenever I'm handed over any project related to such typical topics that have been covered? It could be AML, it could be counterfeit, anything it could be. So as a BA, what do I need to look specific when I approach in terms of requirement gathering, or let's say in terms of execution or whatever it may be?
Okay. So, right, we are looking at this from a domain perspective here. Now, the first thing is, um, if you want to learn personally, right, we need to look at all the related aspects that AML will talk about and KYC will talk about in terms of, clients, customers, products, stakeholders, how they are related, risk related factors, due diligence, documentation, approvals, etc. This is how we need to understand. But when we're looking at a project, and if you would want to, start contributing, first we need to understand the requirements of the bank or financial institution. Because, right, we talk about KYC and AML KYC. It is a general concept, but it is not the same for every other bank or financial institution. We need to understand what is the flavor that they have. How are they looking at things? What do they want to do? Few of the banks, right, they want to do the AML process first and then provide products and services. Few of the banking would want to consider product, services, customers, and then do the due diligence, and then they want to approve and then provide, complete the onboarding and provide the account details to the customer. They're very strict. So we need to first understand what is the legacy way of providing products and services. Now, banking is something which is prevailing for more than 500 years now. So, be it an old bank or a new bank, right? First, we need to understand what is their culture of providing products and services. How are they looking at it? What are the different types of individual accounts that they have? What are the different types of entities that are catering to? Not everybody will cater to every other type of entity. For example, trust and charity is a very crucial and very sensitive accounts that any bank or financial institution can give. So we need to be very clear about what is the kind of business that they do today in the system. We need to talk to the product owners and the stakeholders to understand this. Post understanding this, right, what is the existing KYC process that they are doing? Any bank or financial institution today in today's world have to do KYC. So we need to understand what are they doing today. And we need to understand the market. We need to understand what is being the legacy method, and we need to bridge a gap between both. So this gap analysis is what is very crucial for the business analysts. So if you're a person who have not worked in this industry, you might want to really first have a hand on the market, also understand what the bank is really doing. Unless and until you're build for the bank, you might not get the documents. But if there is any repository which is maintained, you can kind of understand the products involved, the business that is happening, whether it's a single country business or a multiple country business. Say, for example, is it in only India only service, or it is across the board? For example, a panchayat union in India, they do the banking services as well, but they only cater to certain states. They don't even go to cross state as well. But if you see HDFC or ICICI, they do cross-border products and services as well. So all these factors is something you need to understand. And banking is really vast. So if you're interested and if you get a particular department where you can work, focus on that area first, and also gather market related information and try to play around that particular topic, and then go for other departments. Say, for example, if you're getting an opportunity for consumer and savings, right? Focus on consumer and savings KYC. Focus on consumer savings, transaction or SAR related concepts of the legacy methods that's being followed in the bank currently, and try to incorporate additional factors which are missing. So this is how you can start with. And as you go, right, the understanding for wealth management or understanding for other private banking or corporate banking or other sectors will be really bigger. So with that, you can understand. And you can also start with payments or trading. No harm. It's just that I'm saying that you need to harness whatever you get and then try to play around it a little bit, and then kind of improve your circumference to bring in more aspects. Did that answer your question?
Yes, thank you so much. That really answers my question. Thank you so much.
All right, no problem. Thank you.
So I just
Thank you for the question. Do we have any other question?
Is it audible?
Yep.
Okay.
Please go ahead.
I just want to know about this KYC, because today when we are going to create an account, so they are asking a KYC, and when we are going for a loan, they are asking KYC. But my question is more like the banks are collecting all the information, but during the merger of the banks, okay, this KYC is something like we are collecting. For an example, State Bank is there. So for a vehicle loan, we are giving all those details. But during the
Okay.
time of mergers and other acquisition, there are a lot of activities happening inside the bank systems. But unfortunately, there may be a certain area I could see. Even I face the situation where they're asking me that you are holding two accounts. I have to prove myself that I'm holding one account because one of the account is not deduplicated. Okay, so this is something how as a customer we should know that okay, my KYC is linked to only one account or two accounts. Is there any possibilities are there? And during the merger and acquisition, what kind of mechanism today they are doing it, or how this can be communicated? Because it, sometimes I could see after 3 to 4 years later they are telling a communication saying that this is not right. So just want to know some information.
Absolutely. I can totally get where you're coming from. Recently, we had this all state bank of different states being merged to SBI, right? Even I faced the same issue. I had an account in SBT, which is SBT Travancore, and I have been having this account for quite some time. And post the merger, right? They asked different KYC, and they did say that my KYC is missing, and there are two different accounts, one from there and one from here, etc. So first thing we need to understand, right? When the banks or when- no matter the bank say, when there's a merger which is happening, there is a culture or practice which is being followed by one company, and there'll be another format which is followed by another company. It cannot be same because they are coming, they're bringing in different value, their understanding is different, their expertise is different. So when they do the merger, right, initially they will keep everything calm, but for any merger post 1 year or 2 year, there will be certain rules which are signed up that they'll have to do the re-KYC. This is something which we cannot avoid. We need to do when they're asking the first time, right? I'm very sure they will not have all proper checks that they want to add because certain elements will be missed in the old bank. And when you fit in that element to the new bank, right, it will be all empty, but still it will be mandatory. So they are pushed into a position that uh, either they cannot keep your old account, or they would want to, redo the KYC completely from scratch, and they would want to perform some data conversions. So behind the screens during the data conversion, right, not all customer would want to have a new branding. So they will understand the product specifics, and they will only have certain legacy products in a certain manner, and all other accounts will be converted completely. So this is something we cannot avoid. But I totally understand that there is a system issue which they are facing. And trust me, they would have created the new system for this merger within 1 year or 1.5 years, but it will not be stable. At least in India, they push in very slowly. They first ask the name and date of birth and address, and then they will keep asking other questions. So it will go in a batch process. So technically, right, it will be very difficult to capture all of the information. So what they're trying to do is they do a batch process. Now, during this batch process, not all the systems or processes will be in sync. Now, phase one should be an addition, phase two should be an addition of phase one, but that does not happen in all the cases and not in all the banks. So what happens is every time they keep accumulating phase one, phase two, and then they'll ask in phase three. Now, this is the reason why after 3 or 4 years they're asking. This is one reason. Reason number two is every other bank or financial institution have to ask KYC documents once in 3 years. It depends, or it extends from 6 months to 5 months based on the customer and based on the product specifications. This KYC happens once in 6 months, or once in 1 year, once in 3 years, or once in 5 years. So we need to keep providing that information. Why? Because our passport can be expired anytime. Our driving license would have got expired. We never know. And it will be all old data. And technology, right? Even for documentation, they're updating it every time. So they would have procured capacity of say 1 lakh or 1 million, I don't know what is the specification capacity of terabytes or whatever. And then after after the merger, after 3 years, right, they would have got even more bigger of a bandwidth to store, and they would have started storing in the cloud system, which is not compatible with the older one. So they would want to ask for a new documentation as well. So one thing I would say is, if you are asked for a KYC again and again, we should be happy that they're keeping an eye and a check on the account that we are holding. See, these nuances, right? The person who's sitting in the branch would not understand. They only know domain. They do not know technology. But these are all technology impediments. So we need to basically understand. We cannot avoid re-KYC. I understand that, after 3 years, they're asking. That is because there is a miss in a technology. There is a miss of consuming the information in a certain fashion. Not every bank has so much of fund to, have a seamless technology implementation, right? That is the reason. If you see, ICICI or HFC would not ask all these things when it is SBI or Indian in Bank of India or Bank of Baroda, etc. So it depends on how wealthy they are and how well they can have the technology being incorporated.
Sure. Yeah, thanks.
Yeah. I'm sorry, it's 4 minutes over, but I'm okay to take questions.
Yeah,
If
Rani.
you're
There is one question in the chat from Jignesh. I'll read the question.
okay.
How are the eKYC procedures related to PPI wallets like Amazon Pay different from that of a banking client?
Okay. So we have different kinds of KYC. This is a good question. Thank you, Jinesh. So eKYC is something different from what we have or what we're talking about in terms of KYC procedures within the bank. Now, PPI wallets for Amazon Pay, right? They are considered, whether it is WhatsApp or Amazon Pay or all these people are intermediate payment facilitating companies. They will not be given full authorization for banking, but payment aspects will be definitely considered. Now, eKYC is that, right? How it happens is for these particular financial institutions. These are called kind of financial institutions. Amazon Pay structure or the WhatsApp Pay and all these things, right? They are because they are not out and out banking or financial institutions, their portfolio would be that they are only an enabler of transferring money from one party to another party. So their KYC process is that your account details or your customer or your basic information that was registered as a subscriber for Amazon or for the account holding, and all these things will only be enforced. The product related KYC and the product and customer related KYC will not happen. The client identification, the customer identification will only happen. Even the income will not be, of a concern here. Probably your billing address, your delivery address, and which country you are from or which place, your basic information will be only of interest. But otherwise, right, what kind of account you hold, in which bank you hold, what are the products that you're using, all these will not be there, which means the major chunk of rating a customer in terms of risk is completely eradicated. So only the client identification will be of concern for these aspects. This is how they are, differentiated. But eKYC is not just for these kind of portfolios. There are banks for which eKYC can be performed with products as well. And those products will be segregated in terms of how are we giving. Say, for example, savings account or a current account will be provided through an eKYC, but a trade account or a securities account will not be provided for that particular customer. So there are certain restrictions. So eKYC, again, it's been leveraged by many banks and financial institutions, but there are few people who are not okay with taking eKYC as well. Only for the safer products and low risk customers, eKYC are coming into picture. Plus, these banking, payment bank concepts and intermediator to facilitate the payment transactions, they will only get eKYC. So this is the crux and this is the differentiation. The risk
Thanks,
factors, the risk factors and AML will all be compromised for these two different categories who are using KYC. So that is the main thing.
All right, thanks, Rani. Thanks for that. There is no further question on the chat session, and since we have already crossed the intended time, if there are any further questions, you can reach out to Rani. Her LinkedIn profile has been provided, and if you find this session very useful and want to cover more in depth on AML, we could have another session later on, depending on the feedback. Okay. All right, and thanks, Rani. Thanks for taking time on a weekend morning to give us this wonderful introduction to AML KYC. I'm sure it would definitely benefit those who are relatively new to the topic. I'm sure would have created a curiosity for them to explore more. Thanks once again for this insightful session. And thanks to all the participants who stayed with us till the end. And as part of continuous improvement, we'll be sending a feedback form to your registered email ID. Please take some time to fill them up for us to understand the positive and negatives of these sessions. Right? Okay. Final thanks to all, and have a nice weekend.
Thanks, Rani. Thanks so much.
Thank you for all for joining today.
Bye-bye.
Thank you. Thank you so much.